From where we sit, we think the global economy is set to be shaped by a number of forces. Starting with the global economy, we have revised our growth forecasts into a more optimistic tone, and we peg this expectation on a number of factors. Firstly, despite the introduction of sweeping tariffs in the US earlier in the year, the good thing has been that we've not seen the ugly retaliation games that markets were anticipating would unfold. On the contrary, we've seen exporters ramp up production, and consumers, on the other hand, have been stockpiling. And what this has led to has been that resurgence of production and consumption activity, even above pre-COVID-19 levels. So that is one major theme we expect will shape growth, even spilling over into 2026. That is, growth is likely to surprise on the upside. The second theme we think will shape 2026 has to do with the geopolitical environment. And despite the uncertainty you're seeing currently with the Russia-Ukraine conflict, more recently the Israel-Gaza war, we are expecting disruptions of supply chains are likely to upset the disinflation trends we've been seeing across developed and developing economies. However, the good thing has been that global commodity prices have largely remained stable, implying that markets are almost turning a deaf ear to the geopolitical noise, as it were. The third theme we think will shape 2026 has to do with financial markets, and more specifically interest rates, where we think interest rates, in as much as over the last several quarters we've seen interest rates trend downwards, we anticipate that key policymakers, key Federal Reserve banks are likely to take a more gradual pace of reduction in interest rates heading into 2026 as they monitor the developments in the global markets, especially the geopolitical space, where we're seeing tremendous volatility coming from the trade tariffs and the regional conflicts we are seeing every now and then.
Partner with Capital A Investment Bank to build a legacy that lasts.